as inflation fell. Major economies recently embarked on a round of rate cuts. That amidst tensions on major trade routes such as the Red Sea, rising prices and more. They now gather to shape the way forward. We seek to know how this affects us back home.
We have already seen prices of oil per barrel going to about 82 in the space of in the month of October, late September to now. So it's likely to be upward pressure on oil prices, and that, like I said, has a negative effect. Now, the other issue which we must look out for is supply chain disruption. Middle East is on the route to many of our economies here. So when you alter or disrupt that channel, it disrupts supply chain.
This is Stephen Kaboyo, the Managing Director, Alpha Capital Partners. Healthy flows, he says, from offshore investors are expected to offer reprieve as investors look to high-yielding instruments in the domestic market, despite the effects of intense wars in the Middle East.
When you look at the interest rate differential between the U.S. yields and emerging market yields. So that is something positive in type of markets, but we can also talk about it because it comes with risks. Those flows are very dicey, they are very fragile. They can go back as quickly as possible. So when they come, that they put appreciation bias on your currency. So you'll see one of the factors why the shilling is so stable, prolonged stability, is on account of supply flows. But putting that aside, the global economy is also facing a lot of headwinds in terms of geopolitical risks.
Fast forward to 2025, the country is on the way to general elections. Lots of spending expected with an already strained resource envelope hard by debt servicing.
Election cycle comes with its own demands in terms of government expenditure. Government will be quick to be able to close out some of the projects which have political mileage, and that will put undue pressure on government revenues. Coupled with something that we've been living with for years now, elevated debt levels. We may think or believe that we're still moderate risk of distress, but it's really going up quickly, and we may not have the capacity or flexibility to manage that well.
Commodity exports, investments in oil and gas, and diaspora remittances may hold forward at least for a while. Malcolm Sime, NTV Tonight Business.